Hello and welcome to our special Muhurat trading show. I'm Abha Bakaya, with me Sakshi Batra. And on this auspicious day of Diwali trade, we'll have with us some of the biggest names from stock markets, mutual funds, names which decide where money is invested.
Absolutely. This Muhurat trading session, which is just an hour long, but definitely holds immense importance for both traders and investors alike. It marks the traditional start of the new trading year, the Samvat 2082. And for the last 7 years, the Muhurat trading session has always ended in the green, Abha.
So stay with us for the next 90 minutes with our special coverage of Muhurat trading in the stock markets, top market experts, festive insights, and we'll wait to see whether this is an 8th year closing in the green. Joining us to kick off this special session, we've got Punita Kumar Sinha, Managing Partner, Pacific Paradigm Advisors, and Sudeep Bandyopadhyay, Group Chairman, IndiTrade Capital. Pleasure having both of you with us. Happy Diwali to you both.
Happy Diwali.
Punita, let me start off with you, and I can see big smiles. I know both of you are relaxed and enjoying Diwali with family, but if we had to kind of take a look back and see the year that's gone by, I know it's been a slightly tough one for the markets in terms of flat to negative trade, but what are you making of it? What would be your key takeaway, Punita, before we discuss strategies for the new Samvat?
Yeah, I think that India's valuations were actually a concern compared to China and other countries, and then the whole tariff war created an overhang on the markets. And as you've seen, FIIs have been selling, though domestics obviously have no other alternative to investing in India. So that's where the bulk of the money is going, and that has actually supported the market. But it hasn't rallied the way some of the other markets have rallied. And I think going forward, the valuations now are relative valuations are more attractive. And so the growth comes through with all the consumer spending that is assumed will happen with the GST cuts. And hopefully the tariff situation will resolve itself. Then it could be a good next 12 months for Indian markets.
It could be good next 12 months for Indian markets. Let me just take it off from this point with Sudeep as well. Sudeep, why don't you help us understand the one biggest learning that investors must take from Samvat 2081 and ensure that the new Samvat actually brings them more prosperity?
Well, I think one of the most important learning to my mind would be that last year, Diwali, if we were talking, I think all of us were positive and we were all expecting good things to happen. And look at how things shaped up for Indian markets. I mean, I'm not saying everything was bad. Domestic factors, the government initiatives, RBI initiatives, and domestic investors' kind of liquidity did help Indian market. But overall, it was nothing great. And the market didn't give much returns during this last Samvat. And the moral of the story, I would say, is that when you are investing in the market, always think of a duration. Don't think very short term when you are investing in the market. Plan to be in the market for some time. Select your scripts carefully. And then don't get bothered or worked up with the daily fluctuations and the news flow. I think, to my mind, investors should take that lesson. And if somebody sticks to that principle, I am pretty confident that they will make money from Indian stock markets. Look, we have been positive selectively and sector-wise and stock-wise, and we continue to maintain our view. And if some investor is picking up good quality stocks even at current levels, and decides to remain invested for 1 year plus, I think there are opportunities for making money in a big way.
Well, the rally has been ongoing. Everyone's been wondering when it's going to stop. Even despite the fact that perhaps we haven't seen that double-digit growth this year, it's still been steady despite all the factors at play. Punita, when do you see FIs returning to India, and to what extent? What's your view, given the current global layout, given the interest rate trajectory that we're also seeing across central banks?
So, the US markets have been having quite a remarkable year, especially with AI and the amount of AI investment that's happening in the US. Yeah. And that's really been quite a big savior for some of the markets that have, really taken on AI investment, whether it's China, whether it's US. So FIIs have had a lot of opportunities to invest in. And India hasn't offered too many AI investment opportunities. We obviously have our traditional growth story that's pretty robust, but we don't have anything that's really, new age in that sense, the way US and China have. And so that's where the investment has been focused on. And there, of course, there's a froth to some extent building up and a melt up also happening because people are feeling left out. And now it's like everybody's piling on into the US and Chinese markets. And I think once that settles down, some of that money from FIIs who are looking for value, looking for traditional growth stories, secular stories, which India offers, regardless of AI, that's when I think more FIIs will start coming to India. So our valuations and our growth trajectory has to be attractive, which I think is beginning to look more attractive.
Okay. Punita, if I can follow up with that, you did say that India did not offer too many AI-linked opportunities, and that's why the FIs probably looked at other markets. But you also did mark out that right in the beginning, that our Indian government is focused on improving the consumption trends back home with a lot of reforms that are taking place. Do you think that can be the new trigger for FIs to come back? Will those kind of themes perform in the new Samvat?
Yeah, so, which is why I think our banking sector, where the valuations are attractive and are a play on consumption, that's a good space to find attractive opportunities. And I think all investors, domestic and foreign, will be able to find opportunities there. And there are many other sectors with the GST cuts that there'll be consumer discretionary spending will pick up as well. Our economy is actually doing quite well despite the fact that we have all these export barriers that have come up on the tariffs. But the domestic story is still a long term secular story because our population, our demographics, the consumption, premiumization of consumption, all of that is something that India offers and is in a unique position compared to other countries. And so while we don't have the same kind of innovation led in AI, etc., we have other things that we offer. And so it goes back to where are the valuations attractive, where is the growth story, where is the stability, and we are offering that. And I think the biggest concern for Indian markets last year was that we had very high valuations relative to other markets. Now, to some extent, US is getting into that phase where the valuations are a little high, and if there's any disappointment in growth, that could be punished by the markets. We are discounting quite a bit of negative news, and so hopefully there'll be some, if the growth surprises on the upside, that would attract investment.
Okay. Sudeep, let me get your view on the macroeconomic picture there, now the fundamentals and how you see them stacking up when it comes to the domestic market, consumption apart. When do you see further capex? When do you actually see those investments coming in by industry? The government's been prodding them for years. We've not been seeing it happen.
Well, I think it's got to do with consumption. Look, the private sector will go and set up plants and get into the capex mode only when there is a demand. Unless and until the demand picks up, I think in spite of the government prodding and pushing, a real investment from private sector will not come, and that's a reality, ground reality. We may choose to ignore or we may try to do something else, but it's not going to happen. Only when there is strong consumption demand, private sector will go and do capital expenditure. So I think government is doing the right thing. They're trying to push consumption after a long time. Look, the government of India had been focused on infrastructure building for quite some time. It's only recently, since last year, where they have been focusing on consumption. One step after the other came. The first step, I think, was the income tax relief given to the common man in the last year's budget. Then came the GST relief, GST rationalization rather, which was a big step. And, it was kind of required desperately for a very long time. Of course, the pay commission, which the next pay commission report, which as and when gets implemented, will again give boost to consumption. Multiple other measures on ground are being taken to ensure that the consumption demand picks up. I think the direction is right. As and when actual consumption on ground starts picking up, you will see private capital expenditure starting to happen. Till then, the government will have to do the heavy lifting of doing the capital expenditure, and that's what they have been doing.
Okay. Punita, one more concern that I wanted to bring up. I think the biggest concern for Indian markets and investors has been in the entire 2081 Samvat is how to really decipher, how to really maneuver all kind of statements that are coming in from Mr. Donald Trump. Every day, either on Truth Social or any kind of social media platforms, every statement has been the key trigger for a lot of volatility that has happened. Do you think at least that will be put to rest, if not immediately, at least in the latter half of the Sambat 2082? What do you feel? Will there be a respite for Indian investors there?
Well, I think President Donald Trump stylistically likes to make announcements. And even before these announcements have been sort of analyzed. And so there's a lot of uncertainty and unpredictability that come with the announcements because nobody really knows how they'll pan out. But at least he lays out a proposal or a thought that this is what he wants to do. Now, whether that will actually get done or not, that, sometimes the courts strike out or sometimes it's not feasible and there's pushback. But these announcements do make an impact on the markets and create a lot of noise and a lot of unpredictability. And I don't think that will change because that is stylistically how he likes to, lay out his proposals for the future. And so I think that Twitter noise and the social media noise and those announcements around all of that will remain. So we'll have to cut through that noise and focus back on what India can do for India. And that's where we have to look for opportunities and not so much for opportunities that are linked to global.
All right, Puneet, I'm going to come back to you in a moment, but let me also welcome in our viewers who are just joining in to our special Muhurat trading show. I'm Abha Bakaya, and with me, Sakshi Batra. On this auspicious day of Diwali Muhurat trading, we'll have with us some of the biggest names from stock markets and mutual funds, which decide where money is invested.
Absolutely. This is the Muhurat trading session that begins in just 1 minute, viewers. This will last for 1 hour now, and we will get to see as both traders and investors really give a lot of importance to this session they seek blessings from Goddess Lakshmi for prosperity as well as profitable trades ahead. On your screens, 25,901. That's what is being indicated as the opening levels, as we could see for the markets. Remember, Nifty Bank has been an outperformer for the last few sessions. It's already, seen a record high level. It's climbed above 58,000 odd mark. We might see an uptick continuing from that level as well. The IT stocks that have been in focus all through last week because of the earnings focus are likely to continue their momentum. And there you see on your screens, the markets have started to move. Let's look at the Nifty first. 0.3% higher in trade at 25,925. What a beginning to Muhurat trading, Abha. And we could close in on that 26,000 mark for the first time in this year after a long time of consolidation.
That would be exciting, wouldn't it? 7 years in the green for Muhurat trading. And will this be the 8th year? So Deep, on opening ticks, it clearly looks like the market is in a very, very festive mood.
Absolutely. In fact, Sudeep, I'd like to come to you now and try and understand. So we're starting off on a high note at a 52-week high level for the first time, closing in on that 26,000 mark. This brings us closer to nearly about 300 points from the erstwhile record high that we've seen on the Nifty. Do you see higher highs in the new Samvat for the markets? What's your target price for the Nifty this year?
Well, we can talk about target price surely, but definitely I do see higher highs during the new summer. Look, I think the domestic factors, as all of you have been outlining, are pretty good. The government has been doing what is necessary to be done, necessarily required. The central bank is helping. The rains have been plentiful. The inflation has really come under control, much below the RBI's target inflation rate. So things are looking good as far as domestic scenario is concerned. As far as the global macro and global scenario is concerned, I think we still have that niggling problem of 50% tariff levied by US on Indian exports, part of the Indian exports. But I think even there are rays of hope that some kind of solution, some kind of resolution may be in the offing, and that is enthusing investors as well. Look, we know domestic investors have been investing in Indian markets heavily, and they have been carrying the market forward during the last Samvat. But I think the hope that the FIIs will, instead of selling, will start buying in a big way, can take the market to a completely different level in the new Samvat. And I think that's what we are definitely wait for. A lot of new IPOs are coming, which are good quality companies coming to the market, and I think these increases the depth of the market, which is required for Indian markets to ensure that the valuations remain realistic. Instead of too much money chasing too few stocks, more and more good quality companies getting listed in Indian market is good for Indian markets' health. I think that's also happening. So I think things are falling in place. We will definitely see newer highs in the new Samvat, and we will look forward to prosperity for all the participants.
Puneeta, we're talking about value and talking about, markets only moving higher from here. How are you looking at the ideal portfolio mix for the new year? Any key changes you're making, or what do you feel is a prudent mix at this point of time?
I mean, as I said, one should be focused more on the domestic story rather than the export-oriented story. Although, there could always be a positive surprise with President Donald Trump, and suddenly you hear that there's a trade deal that's been agreed upon, and that'll be really positive for the exporters who are very depressed. So I think one could take some risk on that trade and keep one of those trades as well, but a very small portion, because that could ultimately become a big trade if it works out. And then the rest of the portfolio, of course, you have to be stock specific. Domestic consumption story, I said, sectors that look attractive include financials, commodities, healthcare. So there are a lot of sectors that have got growth, but you have to be stock specific. Realty, for instance, as well, because interest rates have come down.
Sure. Sudeep, do you want to add on to any sectors that Puneeta has just mentioned that you believe might outperform in the new Samvat, and maybe also give us some stock ideas that you are asking your clients to invest in for the new year?
Well, as far as concept is concerned, I completely agree. If you are a risk-averse investor, stick to domestic focus sectors, and then you are being safe. We have been recommending buying into cement, infrastructure, construction related companies, and I think that's one sector which definitely will do well with the kind of government capex which has been announced, with the expectation of private capex. I think cement definitely has been our favorite for quite some time. Ultratech Cement, being the leader in this pack, has been our favorite, and I think we still recommend investors buy into that. As far as infrastructure, construction, capital goods, again, these are domestic focused predominantly, and the leader of the pack, Larsen and Toubro, has been our favorite. They have significant orders coming in from West Asia as well, which is improving their margin profile, and again, this can be looked at. We also like some of the consumption related themes which are based on India's story, particularly on the telecom side. We do like Bharti Airtel. They are doing all the right things, ticking the right boxes. International operations are doing good, and there is another rate hike in the offing, which will improve margins significantly, increase ARPU significantly. And the Vodafone Idea matter, which is in the Supreme Court regarding AGR dues, if there is a favorable decision there, I think that will also benefit Bharti Airtel directly. So Bharti Airtel at current level does look good from all points of view, and again, investors can look at that.
Okay, so that's one stock pick coming in from Sudeep, and haven't heard telecom in a while, so that's one for the reasons that he mentioned to keep on your radar as one that a dark horse might shoot out. Punita, let's talk about gold and silver. You mentioned commodities, and we've got to talk about all the glitter and all the action that's been happening there. Everyone is just stumped by the kind of all-time highs we've been seeing on precious metals, and we've obviously been seeing whether it's gold financiers or whether it's metal names, commodity names running up on the back of all-time highs in copper, platinum, silver. Everything is moving. What are you making of this trend?
As I say, in a different way, all that glitters is not gold. It's also silver, copper, everything else now as well. And so I think it's a broad-based commodity rally, and we are also seeing Bitcoins rally. We're also seeing Bitcoin miners rally globally. And it's all because there is a risk to what is the future state of the US dollar. So there is a lot of concern about, is dollar going to remain the reserve currency and what will replace it? So that's part of the reason why I think some of these commodities are rallying, and also then the underlying demand for commodities like silver in the EV and industrial segments is also driving that growth. So I think commodities is an alternative to the dollar as a reserve currency trade. I mean, that's the trade that's kind of been playing out, and then it's also the the general risk aversion that Indians have had a little bit to the equity markets in the last 12 months. So people have been looking for other places to invest. And so gold and silver. But I really don't know what to make of how much more steam there is in this rally. I'm not a commodity technical analyst, but that's really something that is not necessarily only fundamental, but technically driven. And so technical models would be better at predicting where these gold and silver go. From what I'm hearing, that while there could be consolidation in the short term, there could be another leg up at some point next year.
All right, Punita, we'll thank you then for being with us on this very special, and we wish you from the entire team of Business Today and India Today that you, your entire team and your loved ones have a very happy and prosperous new year ahead. We'll of course catch you up soon and into the new year to see.
And happy Diwali to all the viewers.
Happy Diwali.
Thank you so much. Right, Sudeep, what's your call? I mean, gold, silver versus equities, what will outperform, or what do you think gold and silver will continue to outperform the equities in the new Samvat too?
Well, I don't think so. I think, last year what we did see as far as gold and silver is concerned is I think once in a lifetime kind of a scenario where gold and silver really, really outperformed every other asset class. Considering the level at which gold and silver is currently trading, I don't think the new Sambat which started today will see outperformance by gold and silver. So if you want to take a bet, I would say you should take a bet on equities. As far as Indian equities are concerned, definitely the current Sambat will be the one of Indian equities as opposed to gold and silver. I'm not saying you move out of gold and silver, but the kind of outsized returns which you saw last year will not be visible this year. That is pretty much, I can say with some kind of confidence. It is time for gold and silver both to consolidate. I don't think it is going to crash or come down significantly, but some amount of consolidation is par for the course, and that's pretty much what will happen in the current Samvat. Focus on equities, focus on pockets, focus on identify stocks and buy into them. You will do well if you are into equities predominantly.
All right. That's the latest coming in on the commodities front, but lots more to talk about. All the IPO action. Let's take a look, Sudeep, at what's been happening there. Now, in this past year, we've had something like a Black Buck see 153% return. Something like an Arthur Energy see about 125% return coming in. And that's just the beginning of it. The list goes on. But the biggest IPOs are actually towards the end of this year, whether it was Tata Cap, whether it's the upcoming
LG.
ones. Exactly. LG creating history. So it seems like the market's appetite for the primary market is not going anywhere at all. Is there enough value as you see it, or is this again a more risky investment option for investors? Because at least from the historic trends or what we're seeing so far this year, the returns are 100% plus.
Well, Abha, it's always a mixed bag. There are issues which are giving fantastic returns, and there are issues which are trading significantly below their issue prices. And I'm sure you can make a list of that as well, as it's been now shown in the screen. So my advice to investors always have been and will be that be careful as to what you're applying for, what you're getting into. There are a lot of good companies which came with IPOs last year, and there are a lot of good companies which are planning to come with IPO in the forthcoming few months. Now the question is, whether the company is good, the business is good, and more importantly, at what valuation, what price the IPO is coming. Look at the case. I don't want to undermine, but look at the case of Tata Capital IPO as well as LG Electronics IPO. Now, both are good companies coming from top corporates. Globally well known, very respected and reputed. Now, Tata Capital IPO didn't get the kind of response one would have assumed from that kind of a pedigreed entity, because the valuation was not cheap, and it didn't attract the kind of a subscription from the retail as one would have expected, and it didn't naturally get quoted at a significant premium, and it's been around that price at which it came. Whereas look at LG, there was a significant discount to the listed peers, whether you look at Voltas, Blue Star, Havells and everybody else. And LG, of course, is the giant, is a leader, is a global company, presence across segments, fantastic profitability, fantastic business, and at a significant discount to the valuation at which the peers were quoting. So obviously there was a massive oversubscription, and the listing happened at 50% above the issue price. I mean, and look at the excitement it created. So I think you look at the company and also look at the valuation when you are getting into an IPO, and that's the way to go about it. If the company is not good, the business is not good, don't touch. If the valuation is not right, be careful.
Okay, well, on that note, thank you so much, Sudeep, for being with us. And of course, Diwali wishes yet again to you, to your loved ones as well, from our entire team. Of course, we will see you more often in the new Samvat.
Happy New Year to all of you too. Thank you.
Thank you so much. Viewers, we are now going to be joined by two other market masters as well. Devin Choksi, MD of DR Choksi Finserv Private Limited, is now joining in. And we also have with us Amisha Vora, Chairperson and MD of PL Capital, Prabhudas Leeladhar. Warm welcome to both of you, and thank you so much for taking the time out. Warmest wishes for the Muhurat trading as well as the upcoming Samvat as well. Let me start off by asking you, Amisha, what are you penciling in on as far as the new Samvat is concerned? Do you believe we will be able to cover up a lot of lost ground of the current Samvat that's just gone by? And of course, what's your expectation on equity returns?
Happy Diwali and very happy Muhurat trading to you both and all the viewers. Yes, I am firmly in the camp that believes that Diwali to Diwali and beyond, Indian markets will get back their luster. Last year we have, as markets, also given very nominal positive upside, Diwali to Diwali. At the same time, when you compare with some of the global markets, we have been one of the underperforming markets. Yes. When you compare to all the precious metals, which is a very easy trade comparatively, we have substantially underperformed. But I think that underperformance coupled with the fact, and also because of the fact that a lot of FI selling has happened, creates a very good ground. And when you combine that with interest rate cut, income tax cut, and GST cut, we have created a very solid ground for both a earnings recovery and a market recovery.
Okay, great. We are starting to see signs of that earnings recovery so far as well. Devin, a very warm welcome. You know, we've been discussing market trends in the Samvat for as long as I can remember. If you look at the trend this year, you know, do you feel we're at some kind of an inflection point? How are the, you know, different factors at play this time around, different perhaps to what you've seen historically?
Hi, happy Diwali to all of you. Well, I think never in my lifetime I have seen this kind of a situation wherein you have got significantly large amount of money available in the hands of consumer as well as investor. Investor is pouring in money through the SIPs in the mutual fund as well as direct equity. Look at, I think, the kind of IPO subscription that we have been fetching. The retail investors have generally been average subscribing 35 times more, I think, in every IPOs. I think that's a kind of power of money which I have never experienced, I think, in my lifetime so far. Consumer definitely is spending huge, and I think nobody would expect it in 2025. Against all tariff tantrums, India would probably bring down the income tax rate, and they will also bring down the GST rate. They will bring down the inflation in successful manner, and at the same time, interest rates have also come down. I believe that I think this kind of combination is rare. I think one has not seen this kind of combination. And the power of this combination going forward should be in the direction of, I think, higher amount of growth in the earnings of the corporates. I would not be very surprised, I think, if we continue to clock larger than average growth in next 2 to 3 years, at least in the near future, or even on a higher base. So certainly, I think we are heading for a good time. Maybe I think the market has probably started realizing, and that is where I think the laggards have started moving up as well. I think one should see a different Diwali next year compared to what one has seen, the muted one, which in the current year, from last year to current year. So let's hope for the best. I think this full year is beginning now.
Absolutely. Let's hope for the best. Let's also welcome Sunil Shah, Fund Manager, SRE PMS, also joining in on the program with us. Diwali wishes to you, Sunil. Your sense of the top 2 or 3 themes that you believe will outperform in the new Samvat year?
Yeah, thank you so much for the invite. Happy Diwali to all of you and look forward to a great year. So clearly, I think consumption, and as was spoken earlier by other speakers as well, consumption is the theme to watch out for. The kind of money power which is there in the hands of people, given all those interest cuts and tax cuts, we will see certainly a great time going forward. Plus the kind of monsoon which is coming. So it's going to be a combination of both urban spend as well as the rural opportunity. And consumption is a space which has, underperformed the market also for quite some time. It has been the government pack which has done well. So I think in this summer, we will see consumption really taking the lead. And there are good quality companies also which are there. So let's say LG Electronics, for example, is one such big opportunity which is going to be a play for both Indian consumer as well as global manufacturing base. So I think companies like this need to be really watched out for by the investors. So that is one side. Auto remains one of the various, famous and very favorite pick, I would say that. So companies there would be companies like an SJS Electronics, as well as, you can have something like a Gabriel. So the pack of auto is one which I think will do very well. Money in the hands of people is going to get reflected in the auto numbers in this month and going forward. So those are the selective opportunities which I think would do well in the coming year.
Okay, so talking about consumption, and we have with us Amisha, Devin, Sunil, everyone's going to talk about consumption. We're just listening to Punita also just a few moments ago. Let me just break this up in terms of where you're all seeing value. So Amisha, let me come to you, whether it's realty, whether it's auto, gold financiers, whether it's, electronics that are running up post the LG IPO, as Sunil also just mentioned. The gamut is quite large when it comes to some of these consumption-driven plays. Where are you seeing value in the market?
So this entire consumption-led growth will also reflect in higher credit growth, be it in banks, be it in select NBFCs, which are in the relevant pockets. So one way to play that, because you said where is the value?
Yeah.
So we feel that, the banks, both select PSU, private, and select NBFCs have seen in last 1.5 years, because of little tepid growth, valuations also coming off. And now if you see 2 year forward, the valuations compared to their growth and ROE are at a very interesting point. So we think from both growth and valuation perspective as a combination, this segment can give very good portfolio returns and can generate alpha. Once you want to go down further into consumption itself, from there are different facets of consumer, as you very rightly said, from auto, which also we think will do very well, and particularly we are more bullish on four-wheelers, passenger vehicles than the commercial to start with. And when it comes to FMCG, the fast-moving consumer goods, which is typically not so lowly valued. But if you see in a category as basic as biscuit, the GST cut is from 18 to 5%.
Yeah.
And the raw material trend, be it for wheat, milk, palm oil, etc., is also soft. So we think that if this kind of a giant can, in our understanding, give 20% plus bottom line growth, then even something like that can do very well. So we'll have to pick and choose where a combination of growth inflection with valuation is shifting in.
Fair point. Devanji, coming back to you, help us and our viewers understand, those who are sitting with a lot of fund, wanting to maybe create a new portfolio for them or themselves, or maybe to rejig their portfolios. They have two kinds of funds, one as SIPs and the other as lump sum. Where should this money go, especially because a lot of these investors are facing two things. One, a FOMO of having missed out on several opportunities, especially in the commodities and precious metals, to a recency bias again, where they have actually seen the outperformance to come in. So they'll be facing both of this. How should they be tackling this in the new Samvat? Where should the money go, sir?
So, Sakshi, basically, I think the point, if I have to break it up into two parts, I think the one class of investors are basically wanting to go for they chase return, I think, in a shorter duration. So they basically want to play the momentum. And then the people like us, I think, who basically want to buy the deep values, because we believe that, I think, over the next 5 to 10 years, what is going to create the wealth is something which we would like to buy and stay tight with that investment. Now, if you are an investor who is basically looking at deep value, then you are likely to see in next 10 years the likes of Microsoft, likes of Google, likes of Apple in India creating the wealth for investors in next 10 years. And that's where probably, I think, your systematic money has to get invested into these stocks. Even when they don't perform or underperform, I think your systematic allocation into this stock is the key to create that kind of a value growth in your portfolio. However, those who want to trade, for them the momentum is returning back fortunately now. I think in 2025 the momentum probably broke and I think affected a lot of momentum traders also. It is coming back, I believe, I think in 2026. So should that be the situation, then a part of the traders would always play the momentum. We believe that, I think, this is a huge opportunity for somebody who has basically missed out this market to create wealth in next 10 years. Just one example, I think, to put that point across. In 2016, a Geo platform value in the books of Reliance was probably close to nothing. At that time, they started their operation. Today, Geo platform, in less than 10 years, I think, from they started, has created a value of somewhere around 9 to 10 lakh crores in the books of Reliance. So those who remain invested with Reliance, this value has come to them. Now we are not going to count what return you have generated in last 10 years in this particular stock. You are going to basically gift away this particular stock to somebody and say, look, this is a value that I am gifting to you. So that's where probably I think the difference is. I believe that I think huge opportunity next 10 years for making such kind of wealth in the portfolio.
All right, Devan, thanks so much for joining us. And let's actually take a look, just pause and take a look at what the action's looking like this Muhurat session, Sakshi, on the charts. Is it still pretty much all green?
Absolutely. All the sectors are up and about. You know, the small caps are in fact among the major indices outperforming at this point in time. You can actually see a 0.7% of an uptick on that one. Same way, the Nifty is still hovering around 25,900 odd mark. All the sectors are up into the green. Pharma, metals, IT, auto, all of them are shining bright. I think barring real estate, which is just seeing slight dip at this point in time, the top movers on the Nifty include names like Cipla from the Pharma pack, Infosys from the IT pack. You also have Tata Motors, Mahindra and Mahindra. Remember, our guests were talking about four-wheelers, passenger vehicles. Amisha just mentioned, and those kind of names are actually doing well at this point. Axis Bank also among the movers, but on the downside, you have Bharti Airtel, ICICI Bank, Asian Paints, Indigo, Kotak Mahindra Bank as among those that are seeing some dips at least at this point in time. But there are several other sectors also that are moving pretty sharply, and you can see railways and defense also in the move. Remember, this has been one theme that a lot of our retail investors have been focused on in the year 2024. This year largely it panned out as a consolidative year for defense and railways. So let's pick up on that, and I'll come to you, Sunil, on that front. Do you think railways and defense coming back into flavor in the new Samvat?
Yes, very much. I think the way in which geopolitical situations are working currently in terms of the global conflicts, there does not seem to be signs of those abating in the near term. So this is something which is going to continue from the previous Samvat to the next Samvat in terms of the crisis in the global markets. And given all that, each country is now trying to be independent on their own. So whether it is European Union or it is countries like India, everybody is increasing their defense expenditure, defense allocation. So now we'll be seeing good opportunity in the defense space, but the pocket would be more in terms of the private sector companies. So earlier in the last 4 or 5 years, we have seen money spent in the defense sector happen for the PSUs. Now those PSUs are already sitting on huge order book, and given that everything needs to be indigenized, even lot of contracts are now flowing from this defense PSUs to the private sector. So you have small cap companies in the private sector defense pocket, which would be the emerging winners in this entire pack of the defense side. So because in defense PSUs we have seen a run up of 8 to 10x. I think the next such run up could be possible in the private sector defense companies. That is one such thing. Railways has already played out, and there is this Kavach opportunity which is opening up. Now the Kavach opportunity of four is going to be percolating down to companies. So there are 3, 4 companies which are there. All of those would be seeing huge order flowing into them in this coming year. The other emerging, which I think apart from defense and railways, is going to be the shipbuilding opportunity. Government has now clearly chalked out or earmarked 70,000 crores for shipbuilding in this country. And so in this somewhat, we'll see that pocket will work out exactly like what defense was maybe 4 years ago. So I think these are the things which will work out in this year. Private sector defense companies and the shipbuilding companies would be the silent emerging winners in this summer.
All right, let's talk about earnings, Sunil. And given what we've seen so far, are you confident of the earnings pickup that everyone's been wanting to see? IT, for instance, of course, the first lot has come through, setting the tone. But we've seen a lot of other earnings in the broader markets that have positively surprised. We're also, of course, going to wait for the GST cut impact to reflect in earnings further in the next quarter. What's your outlook on that front, and anything particular you're eyeing from that lens?
Yeah, so when we talk about earnings, we need to understand the life cycle of the businesses. So if we pick up Nifty right now, which constitutes about 50 stocks, out of those, maybe about 35 of them are in the mature life cycle. What I mean by mature life cycle is that their earnings or their sales have grown by less than 10% for over the last 5 years. So those pockets would include the IT pack, the FMCG pack. You can name it even few of the oil and gas companies, few of the banking companies. Their growth has been less than 10%, which is lesser than the nominal GDP growth rate. Now, if in the Nifty you have 35 out of 50 companies which are growing at lesser than the nominal GDP growth rate, and the money which is lying, the free float which is lying in those set of companies is humongous. Now, if you compare that with the other opportunities of the auto ancillaries or of the electronic manufacturing, or if you move to the defense or the shipbuilding, those companies are going to grow at upwards of 20 to 25% over the next 3 to 4 years. So we will see a shift of money flowing from those mature set of companies who are having almost about 13 lakh crores of market cap just for the IT sector. So we'll see that money shift to this pocket. And this earnings trajectory, just not about the second quarter. What I'm talking about is a structural way in which it will be positioned even for FY26 or 27. So that is where I think the money flow will happen and we will
So,
see opportunity
Sunil, you
come in
just
that pocket.
briefly mentioned the IT sector, and I wanted to ponder a bit on that. Most of the big names have already come out with the earnings so far, and IT index, if we talk about in Sambat year 2081, has been the weakest performing sector. I mean, it's down by about what, 18 odd percent, and from that point on, when we talk about A, valuations, to the kind of earning sentiment that is somehow turning positive in current quarter as well, even though we still have a lot of headwinds, a lot of uncertainties, global factors to consider. At this point in time, what would you do with the IT sector?
Yeah, Sakshi, so I think in the IT sector, we have value stocks which are available. But India is a market wherein growth is being chased. So as I stated clearly, growth is visible in the other sector. So IT, which is having 13 lakh crores of free float, growing at 7% versus a defense free float of about 3 lakh crores, which is growing at 25%. So obviously, money is going to shift from one pocket of low growth to the other pocket of high growth. So that is the thought process which I have. Having stated that, there are small companies as well, something like a TAC Infosec, which is growing significantly in the cyber security business. So we'll have to pick and choose the small cap companies, even in the IT pack, which can grow at 30-35%, but that would be absolutely stock specific. So I think that is the way one has to play the IT sector and shift to other pockets.
Okay, let's also welcome Shaina Muqaddam, market expert, now joining in on the program. Happy Diwali to you, Shaina. Of course, this is the Muhurat trading action. What are you looking at right now? Any key stocks that you already took some trades in?
Happy Diwali to you, all your viewers. Thank you very much for having me on your show. Yeah, I think it's going to be a sparkling Diwali. And I see, while the large caps, I think we all discuss, they're the usual, the large private sector banks. You have infrastructure, which you have L&T. You have defense, which you have BEL, you have HAL. But beyond that, this Diwali, I have tried to pick certain mid cap, small cap stocks, which in my view, actually will give you that that bump up in your portfolio over the next 1 to 2 years. So I'm looking at renewable energy, at hospitality. So I think these small banks or PSU banks. So some of these stocks you can add to your portfolio with a 2 to 3 year view.
What are your top picks, China, within those baskets in hospitality and PSU banks?
Yeah, so these are stocks which are below thousand, which are below 50,000 market cap. So I pick up a ITC hotels, 45,000 market cap, 12,000 keys as of now. In the next 5 years, they are talking of increasing it to 18,000 keys. A strong management, potential for M&A. So that would be one of my top picks in terms of these smaller companies. Then I would go to still a smaller companies here around 10,000 crores, where I would pick up something in renewable energy, water space, water renewable energy, solar pump space, which is Shakti pumps. The market cap is around 10,000 crores. Now here the GST has been reduced to 5% by the government in this cut. I think this is a big change that will come because one is you're going to have moved towards the organized sector where Shakti pumps will benefit. Two is they've got a very good order like from the Maharashtra State Electricity Board about 1,000 crores, which will add to their top line. I would believe they can show about 25-30% growth in top line, very strong margins. So this could be my second, mid cap pick for the 1 to 2 year holding. Third one, I would go with, say, a still smaller cap company, which is about 4,500 crore market cap, Heritage Foods. Here again, I think not only is the GST cut benefiting them because they are launching products in ice cream, curds, where, here again the GST cut will benefit them. Also, in terms of market cap, if you compare it to their turnover, market cap currently 4,500 crores. 1 year forward, I think their turnover will be about 4,500 crores. So I don't see too much downside from here, and I believe these could be multi-baggers if you hold it for 3 to 5 years.
Okay, fantastic. So there you have it within the Muhurat trading. In case you've been scouting for some multi-bagger ideas, China has actually given you a list of them. So please do keep an eye out on all of these stocks and do speak to your own fundamental financial expert as well to definitely weigh more on these options that have been given to you on the program. Sunil, coming back to you, do you think on the Nifty 30,000 is possible for the new Samvat year?
Yeah, that's a great question. It all really depends on the kind of global events which are working out. I think this is going to be a stock specific market. So if we talk about Nifty, maybe we're talking about a 12% or maybe a 15% from here. But there could be stock picking opportunities which could give even much bigger returns rather than a 20 or 15% on the Nifty. So I think it's going to be completely stock specific this year rather than look at buying en masse or buying across the spectrum. Again, on the Nifty, as I stated earlier as well, that the companies are more in the mature phase. So there maybe a 10% kind of growth will be there in the earnings, and that's the kind of return which we can expect to be delivered on the Nifty side. Money is made in the consumption, and that's where one has to be invested. So I think completely in the mid and small cap space, which would do better than what the Nifty will deliver in the coming year.
All right. All right, Sunil, thanks so much for joining us and taking us through your views and also where we might land out this year. Let's continue that conversation with Shahina as well. And I think we have Sanjay Sinha also joining us in a moment, Citrus Advisors. Shahina, there's been a lot of talk about value, and as Sunil also signed off, he said it all depends on global factors. How concerned are you that perhaps some of that risk still outweighs domestic fundamentals?
I think there the risk is on two fronts. One is the tariffs, of course, but I believe whatever be the tariffs, it's going to have a very small percentage of actually Nifty earnings being impacted. Yes, of course, employment is another factor in India which could get impacted if we have huge tariffs. But I would say that we as stock market investors are going to be relatively, protected. Because if you see Nifty, the earnings, if you see in the current year, we were expecting somewhere about 6.5%. And the overall market has given you that sort of return. Now coming to FY 26-27, we are looking at a earnings growth of maybe double digits. So you're expecting markets to actually over the next 1 year at least give you a 10% return over the next 1 year. Now the second actually factor that I would say is oil prices. With the global, the situation the way it is, if we are going to see oil prices move up, then yes, that could be some impact. But otherwise, I would believe at the current levels of oil prices are sustaining, we should easily be able to do, a double-digit growth in terms of Nifty earnings. So I think over the next 1 year, I would give a target of about 10% up from here in Nifty, overall Nifty. And of course, as I believe, which has been the case over the many years, the smaller caps, mid caps definitely outperform. But in my own portfolio, as well as my recommendation, I do believe you need to have some large caps to give you that stability. So you have the large banks, you have infrastructure that we discussed. So you need to have a stable portfolio to give you optimum returns over the medium.
All right. Well, earlier in an exclusive conversation on Business Today, Ramdev Agrawal, Chairman and Co-founder of Motilal Oswal Financial Services, also shared why he remains optimistic for the year ahead and which sectors he's bullish on in particular. Listen in.
We are at kind of a consolidation phase. Year before was about 12-13%, and 1 year even before that was another 12-13%. So my sense is that despite everything in terms of geopolitical and whatever corporate challenges were there was a slowdown in between post-election and things like that. We are coming out of it, and government agencies are trying their best to come out of it, and not only come out of it, but actually give the major boost to the consumption and so-called animal spirit in the system. So both the regulators, whether it is SEBI, whether it is RBI, government, fiscal as well as monetary, I think from all kinds of things we are seeing push. So I would think that growth will resume, particularly in the earning side, and hence the year looking forward, 25-26, that should be a much more optimistic year than what we had in the last 1 year.
All right, so Mr. Ramdev Agrawal definitely believes that growth is likely to come back in the new Samvat, and that's the hope that there is. Let's also welcome Sanjay Sinha, founder of Citrus Advisors, who's joining in on the program with us now. Warm welcome to you, Sanjay. Happy Diwali and season's greetings to you for the upcoming festivities as well. Do help us understand, when we start off this new Samvats today, what is it that your big wish is for this new year, for the investors, for your clients as well at large? What do you don't want to see repeat of 2081, and what do you want to see in the new Samvat, completely new?
First and foremost, thank you for having me on the show, and happy Diwali from me to all of you and all the members of Business Today TV. Actually, where we stand today, if I look at, the next 1 year, and I look at the next 1 year into 3 parts, what is going to happen to liquidity, what is going to happen to valuation, and what is going to happen in terms of events, I think it is very easy to be, I would say, more optimistic about the next Samvat than the last 12 months or so have been for us. First and foremost, in terms of liquidity, I think, we've probably seen the worst of the FII selling behind us.
Okay.
And I think it is an equally impressive thing that, in the background of such selling and a lackluster performance by the domestic market, the domestic investors have kept their faith in equity as an asset class. And I think, that is the biggest pillar that the Indian markets can have. So if you ask me, my wish list number 1 is the confidence of the domestic investors in the Indian equity market. That should not get shaken.
All right, so keep the faith intact. That's the message coming in there from Sanjay. Sanjay, while of course returns this year may have been flat, but we consistently see a huge amount of enthusiasm from retail investors in riding through this wave in the markets. What should their expectations be on returns going forward?
So, I now come to the second factor which I mentioned, which is valuations. One of the criticisms of the Indian market, if we rewind back to September 2024, just before Diwali, was the excessive valuations at which our markets were trading. In the last 12 months, 4 quarters have passed. Indian corporates have not been sitting idle. The corporate performances have improved, and therefore, in relative terms, our valuations now are much better. From today onwards, I think that, prospectively, while we have seen the industrial sectors doing reasonably well with bulk of the profits coming from, the commodities, today, I think the consumption-oriented sectors also now have a very optimistic outlook thanks to the GST rationalization and also the income tax cut that preceded that. And, we also have the pay commission award going to be announced in the next few months. So consumption as a basket, I think, is going to be one of the tailwinds which will get attached to the corporate performance. And the second factor is the performance of the banking sector that we have seen, whatever little we have seen in Q2 of FY26. Given the fact that, the 100 basis point rate cut by RBI has not dented the net interest income of the banking sector, I think is also a reason to be optimistic. So valuation is the second thing which I think should add double-digit growth to the overall profitability. And I think that is where the rational expectation of the returns from the market should be.
Fair point. Abha, I think the consensus is consumption as a theme and
Yes.
banks to play that consumption theme in the new Samvat for sure. Shaina, let me also bring you in case you would want to also add on to this consumption-oriented theme. Which are the pockets that you're also betting big on for this new Samvat? Is it going to be only banks via which maximum profits can be harnessed, or do you think one should also look at specific themes like FMCG, autos for instance, maybe even retail or e-tail for that matter?
Well, yes, I think consumption is definitely going to be a play in this current year, which of course banks tops the list. You can have the large private sector, you can have the public sector, mid-cap public sector banks, because the government has left a lot of money in the hands of people. You have the GST cut, you have the income tax savings that investors will, I mean, that people will have in terms of their tax savings. So I think all these things are going into consumption, and we can have consumer durables also that could be a play. And in that, actually, you have number of the facts. Some of the stocks which I discussed, they are actually stocks which are consumer related. For example, when I discuss Shakti pumps, farmers will have more money in their hands. You can have them investing more in pumps, solar pumps. So I think to that extent you have it. Then you have, I mentioned ITC hotels. There you have the domestic consumption play. You have smaller banks that you can look at. You can look at Canara Bank, PNB, Bank of Baroda. So I think all these plays are consumer related. Autos, of course, these are large caps. You can look at some of the large cap auto stocks. They're doing very well in terms of numbers. So you have a basket of stocks in your portfolio.
Within banks, China, public or private sector banks? Would you stick to the private sector, or are you eyeing the public sector just from the point of view of a whole host of reforms also that are likely to come in there?
The private sector banks, the large ones, HDFC, ICICI Bank, form a part of the core portfolio. So I wouldn't really be touching those stocks. And we've seen them. I remember 5-6 years back, they were. I think ICICI Bank, I personally would have invested when it was lesser than 300 rupees. Like I think in 2018 or 17 or something. So one doesn't really touch that part of the portfolio. But public sector banks, I believe, as of now, there's a lot happening. Like for example, you take Bank of Baroda. There, the NPAs have come down substantially. Price to book is just about 0.9. The provision coverage is very strong. So one can look at investing in these stocks and look at a return over the next 1-2 years of maybe 30 to 40%. So and you keep reviewing them. So I would say keep reviewing your PSU banks, and I think that is the way to play banking.
Sanjay, let me also bring you in. I wanted to focus a little bit on the e-commerce spaces, the e-tail spaces a bit, because you talked about consumption, and the biggest trends that we are focused on and are getting data of is that maximum amount of consumption during these festivities and post GST cuts has actually happened online as well. How are you looking at some of those players? Quick commerce, Zomato, Swiggy, we do know that during Diwali, every 10 minutes somebody was getting a package at home because something was forgotten, although puja needs were fulfilled because of that. Help me understand, what are you looking at there? And of course, when we expand this to fashion e-tail like Nykaa, Mama Earth for instance, even insurance, PB, fintech, so all kind of online players, how are you looking at them?
So first and foremost, I think, after the phase in which capital was being consumed in a very massive way by these e-commerce companies, I think now they have entered into a phase of maturity where there is now more respect for capital. Also, I think, one of the factor which has brought that amount of maturity is the fact that the participating in e-commerce has now become more of an accepted norm in the Indian population than was the case earlier. And last but not the least, the fact that some of them have also now, if not reached the path to profitability, they are not very far away from there. So therefore, as an investor, I think in terms of now taking a bet on these companies would make more sense, and it's probably a little easier for valuation. Having said that, there is also an added point. Many of these companies actually got listed at very fantastic valuations, and from those levels they have corrected massively. So maybe, if you had picked up those companies at the levels to which they had corrected, you might actually be sitting on a multi-bagger in some of them as far as e-commerce plays are concerned. But if you will allow me to digress a little bit, and I would like to add a little bit to what China was mentioning in terms of participating in consumption as a space. There are two other sectors which are also proxies to consumption, and I think in today's context they become very relevant. One of them is travel and tourism, and the other one is hospitals and related industry. Because one of the things on which we are today leveraging on is the rising per capita income in India and the larger amount of disposable income that Indians have. Now, two of the areas in which much of this spending is going to go in travel and tourism, and also in terms of the amount of spending that they will do in healthcare. So I think these two sectors are also very strong proxies to consumption, other than the conventional areas in which people will be spending.
Okay. Shaina, let me also ask you, when it comes to the specific underperformance that we saw in some export-oriented sectors like IT, for instance, how are you looking at them? Do you see the tide turning for better for these heavyweight spaces? Is the underperformance done and dusted, and will this bottom out now?
I feel yes, because we are starting to
Yes,
see
I'm
some
getting.
bit of stability come in. Yeah. So I think so, yes. But as Sanjay mentioned, there are other sectors. In fact, I would totally agree with hospitality as well as hospitals. Hospitals, I think Apollo hospitals look like a good bet actually from here on. In IT, I think yes, you can be with the leaders. You have TCS, which has underperformed to a big extent. Infosys, so you can see them bottoming it out from here on, and you have also in terms of rupee depreciation, which is supporting their growth and profitability. But I would think that this year is going to be a bit, a consolidation year. One can start dipping in slowly into these stocks and then look for the maybe 2 to 3 year type of time frame to get a decent return. But I would prefer other sectors over IT services as of now.
Okay. All right. Sanjay, when you're looking at earnings, anything particular you're eyeing? We're just about getting into the thick of it.
Yeah, so as of now, we've just had a handful of earnings, out of close to 7,000 companies that will be announcing their results. Close to just about 300 or 350 companies have announced. So it will be difficult to extrapolate from this handful of companies as to what is going to come. But two comments can be made about the earnings, what one has seen. Number one is that the IT sector, in terms of their quarterly performances, have not disappointed as much as what the market was expecting, and I think it is also reflecting in the stock prices of the in the sector. And second thing is that the results from the banking sector, which I also mentioned in my initial comments, the impact on the net interest income thankfully has not been as severe as what the RBI rate cut would have led us to imagine. So these are the two, I would say, opening comments on the quarterly number. But the bigger ones, where chunk of the profits will be coming, will be from the sectors such as, cement, metals, energy. Those big numbers are still to come. Therefore, what will be the overall picture, we'll probably get to know in a few weeks from now.
Sure. Sanjay, could you also tell us, between large caps, mid caps and small caps, where do you see the money flow into? This Samvat was largely about the large cap companies outperforming. Do you think the mid and small caps will also start attracting more funds now? Is this time that they will also start to now pick up pace?
So if I go by the AMFI numbers, those numbers seem to be suggesting that, there continues to be a fascination for the mid and small cap. And going by the fact that, now the number of demat accounts are in excess of 20 crores compared to, less than 2 crores pre-COVID, the sheer magnitude of Indian participation in the Indian equity market leads me to expect that, there will always be a larger participation in the mid and small cap space. Now, there has been some, I would say, heartburn in this space, more particularly what we saw in the early part of the calendar year, more between January to March, where mid caps and small caps corrected very sharply. I think some amount of sanity has come, but markets being what they are, we will never learn. There will again be bubbles that will get built up in that space. But I think, that is not something I see happening in the near term.
Okay, got that. I'd just like to mark out for our viewers. We are seeing some profit taking already. Just 5 minutes to go before we end this Muhurat trading session at 25,842. We are just flat with, of course, some negative bias at this moment. Which are the sectors that are seeing some cuts? You are seeing real estate that's down, PSU banks as a whole. The Nifty bank is also dragging just a tad bit, 0.2% lower. You have the IT stocks that have slipped into the red, oil and gas as well. And among the stocks on the Nifty that are pulling down the index, you can see IT names clearly. HCL Tech that's down, TCS that's down. You also had Infosys that was down right in the early part of the session. Let's also look at the banks, heavyweight banks, ICICI, Kotak Mahindra Bank giving up some gains there. Max Healthcare, Asian Paints also among the losers at this point in time. So maybe investors are just trying to profit book towards the end of the session right now.
All right, let's also welcome in Manish Dangi, CEO and founder Mosaic Asset Management, who's joining us in just a couple of minutes and get his view as well. But really, as you mentioned, Sakshi, a little bit volatile right now. Overall, like we said, we've had 7 years of gains during Muhurat trading, and this time as well seems to have been weakening a touch. So I don't know if we're gonna,
fingers crossed,
hit an 8th year, but the jury is still out. We still have about 5 minutes to go there. But we've been speaking to a whole host of market experts, and I think overall, and as Sakshi mentioned earlier as well, there is generally consensus on the mood of the markets, on the fact that investors still have faith in domestic equities, that the future looks bright, the India story is strong. Absolutely. So I think there's a resounding view to continue investing. Of course, invest smart, invest for the long term, invest in a nice mix when it comes to your basket of stocks or via mutual funds. So don't necessarily go in for the speculative buys or quick returns.
Absolutely. And equities, I think, may just do a comeback into this new year. That's what most of the experts do believe, that after underperformance in this current Samvat, we could see that the equities will outperform, especially because the other asset classes like gold, silver, even Bitcoin, crypto, they've all outperformed and shot up very sharply in a very short span of time. So it could be
And
equities.
of course, the biggest factor is the global uncertainty, and that seems to be easing. I think Trump, if anything, has now become the norm.
Hopefully, absolutely.
So that's really the view that's come in from across some of our experts. But talking about gold and silver, because it's still Diwali and everyone's still celebrating, you spoke to Jim Rogers actually.
Yes, absolutely.
What did he say? Because for the last 10 years he has been saying buy gold, buy gold.
Yes, he's been a happy man, and he still says that I've not sold any of my gold and silver even at these high prices, even though now he's waiting for some cool off so that he can pour in more. He's still very, very bullish. I asked him a question that if gold shoots to $5,000, what would you do? He said, I will not buy then. I'm waiting for some cool off. That'll be too much and too in a short time. But yes, he's still bullish on gold and silver. He says, I want all of my family members to continue to enjoy in their lifetimes. And when I asked him, do you see doubling of gold and silver prices from where we are in our lifetimes? He said, many more times. That's what he said in his own style. And he was drinking water off his silver goblet that time, Abha. And that's the focus that he has. He's a man of gold and silver.
That's Jim Rogers for you. That's Jim Rogers for you. But it has really been an extremely precious Diwali for those that did make that sound investment in those precious metals.
Sure.
Fantastic returns this year, and of course also this festive season moving to new highs constantly. But let's take a look at how we're winding up. Just about 2 minutes to go, and bring up the index for you just to see if we are going to be seeing that 8th year of returns. It'll be be a shame to break the, break the consistency.
Yeah.
But yeah, it really would, especially since the commentary has been so positive. But clearly, markets are still in somewhat of a range-bound move at the moment. Perhaps earnings season will start to kick it off.
Absolutely. We do have most of the sectors that have slipped. Even the mid-caps are now down in the red. The only sectors are metals and pharma ticking higher along with media stocks. Small caps still holding up at this point in time. Movers on your screens so you can actually see all the sectors have seen last few minutes of a profit taking. Top gainers on your screens, you have Cipla 1.7% higher, Bajaj Finserv, you have Infosys, you also have Grasim, Axis Bank for you. So that's a contrasting trend. You have Axis Bank higher, you have Kotak and ICICI Bank down. So it's just about mixed trends across the sectors that you're seeing. You have the NBFC names higher, metals are shining bright, four-wheeler names, Tata Motors, M&M, also hovering up, and even Maruti Suzuki for that matter. But I think this is also going to be a year when we are going to be seeing again continued action on the IPO front. Many of our experts also pointed out, of course, historic year in terms of the fundraise that we've seen in Sambat 2081. Will that continue? We will find out for sure. Let's actually ask that question to Sanjay. Sanjay, what do you expect as far as the Samvat 2082 is concerned in terms of the IPO and the fundraise via the primary market space? Is that something that you're watching big time on, especially when the NSE IPO could be coming in? Do you hope for that one coming in?
So, yes, the IPO space, in my opinion, will continue to be very vibrant. In fact, if you don't have to look very far, just look at the last 6 months when the markets have been very lackluster, when we have been getting so much of selling by the FIIs, we've had blockbuster IPOs coming into the picture, and they have got significantly, in fact, record collections in terms of their subscription. I think that trend is going to continue to play in the next 12 months and maybe beyond also. In my opinion, if I look at it from the fund manager's perspective, I think this flush of IPOs which are now coming into the Indian markets have both sides, in the sense that in some cases, I would say in large number of cases, they are not leaving much on the table for the investor to pick up from the IPO price. But at the same time, if you look at it from a little detached point of view, they are also bringing in to the market a lot of unrepresented sector which were never there in the listed space. And even among the existing categories, they are expanding the stock selection basket because of the variety of IPOs which are coming. So I think, it is in a way a good thing for the markets. And given the fact that though belated, the Indian investors have woken up to the attraction of equity, if all of that was going to be chasing money only in the secondary market, then we would have had a blowout very soon. The fact that some of that liquidity is getting sucked out into the primary market, I think, is a sobering influence on the Indian markets.
All right. Let's also get you an exclusive conversation that we had with Sunil Singhania, founder of Apogis Asset Management. He shared his view on valuations, investment opportunities this Samvat, and all to look forward to in the new year. Listen in.
By nature and by our philosophy, we tend to focus on reasonable ROC companies, profit growth companies, and profitable companies. And obviously, we look at investment as if we are becoming partner in the business. So we'll want to become a partner in the business where the growth outlook is, I would say, combined with the valuations. So where there is growth, we don't mind paying a higher valuation, but where there is no growth, obviously, or low growth, high multiples don't justify. And our stance has thankfully come out pretty right last 5-6 years. So since 2019, we have been saying that there is a bubble in quality, and the best companies are not necessarily the best stock because they are priced to perfection. So I think there is one bucket in the market which has underperformed massively, but which still continues to be quite overvalued because growth is being sort of evasive for these companies.
All right. Well, I'm coming back to you both, Raina and Sanjay, to find out, what are the levels that you're looking forward to in the new Samvat, even as we've ended just managed up into the green. So we have continued that tradition, 25,868, just managed at 0.1% higher on the Nifty, even though the Nifty Bank has ended into the red. Shaina, your levels for the Nifty and the Nifty Bank for this new Samvat?
Well, I'll stick to Nifty. I would say the range between 25,000 and 28,000 over the next 1 year.
Okay. What about you, Sanjay?
I think we have more or less found the base in terms of Nifty levels. On the upside, we could probably see the Nifty at 30,000 levels by the next Diwali.
All right. Shaina, Sanjay, thank you so much for joining us. Great having you with us, and have a wonderful, festive season. This is where we close, and as Sakshi said, at least we just about saw that spot of green. Optimism is very much intact, as it always is here in India on this very auspicious day of Diwali. Hope you've made that, auspicious investment, and that you continue to see some great returns all through the year. Thank you so much for joining us. That's all from us for now.